I don't just put videos together and write articles. I'm a trader, so I know that navigating the financial markets can be pretty tough at times. And the true strength indicator, the TSI, can help you along the way of trading. So we're going to talk about that. And it is a useful tool for traders. It does provide an unbiased and a pretty effective way to measure the intensity of price action. So this can help you make better decisions about when to initiate or close a trade or even trade at all. So you got to understand how it works. You have to understand the overall trend of the instrument and the strength of that. So understanding all the indicators that you use, it's pretty important. Now the charting package is going to do the calculations for you, but you really should know how those calculations are made. So the TSI uses two primary components. One is price change, and the next one is smoothing. And here's the formula for that. So to calculate it, we just calculate the price change, apply smoothing to both the price change and the absolute price change. The TSI is then calculated by dividing the double smooth price change by the double smooth absolute price change. See, this is why having a trading platform that does it for you is a lot better. So what does it imply about trends? It just shows us whether we should be trading or not. So we got positive and negative momentum. The TSI, it oscillates around a zero line, and that represents the center line between positive and negative momentum. When it's above zero, we think about positive momentum, and we can assume that we're looking at an uptrend. Below the zero line, it's negative momentum, we might think downtrend. But it also provides insight into the strength of a trend. So the larger value of a TSI indicates a stronger trend. Smaller value, weaker trend. So a value of plus 30 is a stronger uptrend than a TSI value of plus 10. And it can provide pretty important insights into trends by indicating the strength and direction of the price movement. So here's what the TSI can tell you about market trends. And when you understand how the TSI can show us this, then you can then use this information to help decide whether you're going to buy, sell an instrument, or just stand aside. Another popular indicator is the MACD. So let's compare both the TSI and the MACD to see which one is best. Now the MACD, it's a widely used momentum indicator. It just calculates the difference between two exponential moving averages of a price. So the MACD will help you identify price trend, trend reversals, bullish or bearish market conditions, and potential entry or exit points. Now, both indicators, they're pretty valuable to analyze market trends and momentum, but there's some differences. The calculation is different. The TSI has a double smoothing of price changes to measure momentum. The MACD relies on the difference between a short-term and a long-term EMA. Sensitivity, TSI is considered to be less sensitive to price movements compared to the MACD because of the double smoothing price formula. So it might generate fewer false signals, but it also may react more slowly to sudden price movements. Interpretation, TSI, that emphasizes the intensity and trend of price movement. MACD can help recognize possible shifts in market conditions and reversals. So you got to understand there's no best indicator. There's no single indicator that's perfect or suitable for any trader or for all strategies. You can use a combination of indicators, including the TSI and the MACD. Let's talk about the TSI with the ATR, the average true range. The average true range, this measures volatility over a given period. And you combine these indicators, this can help identify opportunities in trending and volatile markets. So a high TSI and a high ATR may signal a strong signal, volatile bullish trend, where using a trailing stop could protect profits while you're riding the trend. There's limitations, of course. It's a lagging indicator like most indicators. So it's based on historical data. It's not always going to reflect future price movements or even the current conditions properly. False signals, it is less sensitive to price fluctuations compared to other indicators, yeah, but it can still give you low quality signals to trade, especially when the markets are really volatile. There's no guarantee of success. It can provide pretty decent insight. There's no success in trading, and this may seem obvious to most of you, but to a lot of traders that focus on technical indicators, they're looking for that holy grail, and there is not one. So when you understand the limitations and you compare with other indicators, you know that these can help develop a well-rounded trading strategy. But it's important to use a combination of technical indicators and price action, market analysis, risk management techniques if you want to increase your chances of succeeding. So we're going to talk about incorporating the TSI into a strategy. We're going to talk about the signal line and center line crossovers, as well as leverage and breakouts and divergence. So when the TSI is being used, traders will often look for a crossover. This can give signals and momentum direction. There's two types of crossovers, signal line and center line. The signal line is when the TSI line crosses a moving average of the TSI. And that moving average is about a 7-day or a 9-day, typically EMA. These crossovers can indicate potential buying or selling opportunities. A bullish signal is when the TSI line crosses above the signal line. Bearish when the TSI line crosses below the signal line. We have zero line crossovers. This is when the TSI line crosses above the zero line. Bearish is when it crosses below the zero line. So we have the crossovers, but we can also use breakouts and oversold and overbought levels and divergence to analyze the TSI and get some trading signals. So breakouts, just when price moves beyond a predefined level or a range. And these can be a sign of a strong trend and potential buying or selling opportunities. So a bullish breakout, when price moves above a resistance level with the rising TSI, that could signal that the asset's price is gaining momentum. Might be a good time to buy. On the flip side, price breaks below a support level, TSI goes down. It could suggest the price is losing momentum or momentum to the downside. Might be a good time to sell. Oversold, overbought, any reading below minus 70, some will use minus 50, suggests that sellers may weaken and we may get a buying opportunity. Overbought levels, it's above 70. Some traders will use above 50. This is the sign that the instrument's too far. They may present an opportunity to the downside. But you got to look for confirmation of these reversals. Use chart patterns or some other indicator. Don't just trade the TSI alone. We have divergence. This is when the TSI moves in the opposite direction of the price. And now divergence can be an early warning sign of a trend reversal. Got bullish divergence. Price is making lower lows, but the TSI is making higher lows. Might get a potential reversal to the upside. Bearish divergence. Price makes higher highs, but the TSI is making lower highs. Again, might be looking for a reversal to the downside. So when you add the signal line and the center line crossovers, breakouts, and divergence, you can actually develop a pretty robust trading strategy. Best way to use it, consider these techniques. Combine with other indicators, look for confirmation, adjust the settings, risk management's important, and backtest your strategy. What about day trading? Well, we can use it for day trading, a 5-minute chart example here. You might want to adjust the settings to be more responsive to short-term price movements, but it's up to you. So for a TSI period, consider reducing the period to capture the short-term price fluctuations, like a 5 to 10 period. Might be better for day trading than the default 25-day. The signal line, use a shorter EMA for the signal line, like a 3-day or a 5-day. Remember, the best settings for your strategy is going to depend on your style, the markets that you trade, and your preference. So experiment with different settings. Pros and cons, it's a good indicator, but like all indicators, it comes with a share of pros and cons. And here they are right here. When you use it for intraday, keep in mind the pros and cons. Consider incorporating other technical indicators and chart patterns into your strategy. This will help keep it robust. So at the end of the day, it's a pretty powerful indicator. It can help day traders, swing traders, all traders to identify potential buying and selling points. When you measure the strength and direction of price, the TSI provides some pretty important insights into the trend, which could be used in your strategy. Understand the pros and the cons that we talked about. Combine it with other indicators, chart patterns. This will build a more robust decision-making process for you. And if you're tired of just trading with indicators in general, something different here. It's called the Ultimate Guide to Price Pattern Trading. It's totally free. Some people sell this kind of information for $100 and more, but you can get it for free. Download your free guide. The link is to the left and below in the description. I think you'll get a kick out of it. Thanks for watching.